So ADP just dropped their latest earnings report, and honestly, it's a bit of a head scratcher. On one hand, they're putting up really solid growth numbers, but on the other, their own data is screaming that the job market is hitting the brakes. So what does this all mean for the future of work, for the rise of AI, and for the health of the entire economy? Well, that's exactly what we're going to unpack today.
All right, so here's our game plan. First, we're going to look at the big, flashy numbers, the what happened. Then, we'll dig into what those numbers really mean, the so what. And finally, we'll check out ADP's playbook for the future and what it signals for all of us. Sound good? Let's dive in.
Okay, first things first, let's talk about the big picture. ADP really came out of the gate swinging to start their fiscal year. They put up some seriously impressive numbers that definitely got Wall Street buzzing. So check this out. Revenue. They brought in $5.2 billion for the quarter. That's a 7% jump from last year. Now, for a company as huge as ADP, a 7% jump is no small feat. That is a very strong start. And the best part? That growth wasn't just for show. It flowed right down to the bottom line. Their adjusted earnings per share, which is just a key way of measuring profit, also grew by, you guessed it, 7%. So this tells us their growth is healthy, it's efficient, and it's profitable. But big growth numbers are one thing. If your customers are leaving out the back door, it doesn't really matter, right? And for a company like ADP, we're talking over 1 million clients around the world. Keeping them happy is everything. And this, right here, is where the story gets really interesting.
Yeah, they didn't just meet expectations. They completely blew them out of the water. I mean, we're talking about a record first quarter for sales. They kept more customers than even they thought they would. And get this, their client satisfaction scores were the highest they have ever had for a first quarter. This shows they're not just getting bigger, they're building a rock-solid, loyal customer base.
Okay, so those are the shiny headline numbers, but now it's time to pop the hood and see what's really going on with the engine. Because tucked away in ADP's data are some massive clues, not just about them, but about the entire job market.
And to really understand what's happening, we need to talk about this one key metric they use. It's called pays per control. Now, I know it sounds super jargony, but stick with me here because it's probably one of the most important things they track. So what the heck is it?
Okay, the easiest way to think about pays per control, or PPC for short, is like a pulse check on the job market. It just looks at all their current clients and asks a simple question. Are they adding more employees or are they cutting back? Because they have so many clients, it gives them this incredible real-time view of what's happening with hiring across the country.
So what did this big pulse check find? Well, U.S. pays per control growth was 0. Flat. Nothing. Let that sink in for a second. It means that while companies aren't necessarily firing people in droves, they have hit the brakes hard on hiring new people. It's a huge sign that businesses everywhere are feeling cautious. So you might be asking, wait, if hiring is flat, where did that 7% growth come from? Great question. It came almost perfectly balanced from their two main business engines. You've got employer services, that's their classic payroll and HR software, and then you have their PEO business. That's where they basically act as the entire HR department for other companies. The fact that both grew at exactly the same rate, that just shows you how incredibly stable and well-balanced their business really is. All right, so we've got this weird situation. Strong results for ADP, but a cautious vibe in the broader economy. This brings us to the now what, right? How is a giant like ADP planning to keep growing when things are so uncertain? Well, they've got a very clear 3-part game plan. Their whole strategy really boils down to this awesome 3-pronged attack. First, they lead with the best technology they can build. But they're smart. They know tech isn't everything. So second, they back it all up with real human experts. And third, they leverage their massive size and global reach. It creates this powerful moat around their business that smaller competitors just can't cross. And look, this isn't just some fluffy mission statement on a poster. They are actually doing it. Just this last quarter, they rolled out major tech updates for everyone, from the mom-and-pop shop on the corner to massive global corporations. They even went out and bought a whole new company just to make their software better. This is what you call a full-court press on tech. Now, inside that big technology pillar, there's one thing that stands out above all else. It's the area that's absolutely critical for their future, and they are betting the farm on it. Of course, I'm talking about AI. And let me be super clear here. This is not some pie-in-the-sky science project they're talking about for 5 years from now. They are using AI at an absolutely massive scale today. Their main tool, ADP Assist, has already handled over 5.5 million conversations with clients. And it's not just some dumb chatbot. This thing is smart. It proactively finds payroll mistakes before they happen. Think about how valuable that is.
You know, their CEO, Maria Black, said something that just perfectly captures their whole mindset on this. For them, AI isn't just about doing the same old stuff a little bit faster. No, the goal here is to completely change the game, to rewrite the rules of how work gets done, and to build something that their competitors simply can't copy.
But here's the really smart part. This AI revolution isn't just for their customers. They're turning these incredible tools inward, on their own teams. Their developers get AI assistants to help them code faster. Their sales teams get AI-powered insights to better understand clients. They're automating the boring stuff so their own people can spend more time on the high-value, complex problems that really matter. It's brilliant. Okay, so after all that, what does the rest of the year look like? Let's take a peek at ADP's forecast. Because remember, they have this unique bird's eye view of the economy, so what they predict is a pretty big deal for, well, for all of us. When you look at their updated forecast, you see a couple of small but really telling tweaks. First, they've officially downgraded their hiring forecast to flat. That confirms that whole cautious feeling we were talking about. But, and this is the interesting part, on the flip side, with higher interest rates, they're actually going to make more money just from the interest on all the payroll cash they hold. It's like a little built-in financial cushion. But here's the real kicker. This is the main takeaway. Even with the hiring market hitting the brakes, ADP is not backing down from its goals for the year. They are standing by their forecast. They're still expecting 5 to 6% revenue growth and an even better 8 to 10% growth in profits. That signals some serious confidence and stability. And that leaves us with this one big, fascinating question to chew on. When a giant like ADP, a company that can see what's happening inside a million other businesses, sees hiring just stop, but at the same time is super confident about its own growth, what does that tell us about the bigger picture? It kind of suggests that, yeah, everyone's being cautious, but maybe, just maybe, the underlying economy is a lot tougher and more resilient than we're giving it credit for.